we also want to focus a little bit on the real estate sector now. Kolte-Patil Developers is the first management on the show. It was a decent set of Q4 numbers. The stock, though, is the biggest underperformer from the realty pack. Bookings in Q4 missed estimates and realization came in flat. We have Rahul Talele, the Group Chief Executive Officer at Kolte-Patil Developers, who joins in. Rahul, thanks a lot for joining in. You know, now that FY24 is behind us, let's just take stock of what FY25 could bring about, right? In the last fiscal, you saw the highest ever bookings at about 2,800 crores, which was a growth of 26%. Now, that was largely in line with your guidance. Can you tell us, both in terms of bookings, at 2,800 crores is the base, and in terms of, million square feet, about 3.9 million square feet is where you're at. What do you see FY25 like? How much can you build on to that? If you can share some numbers with us.
Sure. Thank you, Sonia, for having on your show once again. So, see, FY25 was again, FY24 was, highest ever on multiple parameters for us in terms of, the pre-sales number, in terms of the collection numbers, in terms of the BD closure, likewise in terms of the lowest net debt to equity ratio. So going forward, since FY25, we are confident of launching around 8,000 crores worth project. So our pre-sales guidance for FY25 is around 3,500 crores, and in FY26, our guidance would be around 4,500 crores. So whatever the pre-sales number that we have achieved in last 3 years, so we are planning to double that pre-sales guidance for the upcoming 3 years, from 6,800 to 13,500 for FY25, 26, and 27.
The one concern is that, some of your new launches, especially in Q4, have been short of what the street was expecting, and there have been some delays as well. I understand that the premium phase at Life Republic was deliberately delayed in order to achieve certain thresholds of sales. Can you tell us a little more about what is the launch pipeline? I mean, you gave us the pre-sales guidance of 3,500 crores for FY25, but what is the launch pipeline that you're looking at? And some of these legacy projects have been seeing higher overheads and higher expenses as well, which has hit your profitability. Is that something that we can expect even in the next few quarters?
Sonia, let me try to answer the second part of question. See, what are the projects that we have launched in second half of FY23 onwards? Over there, if we, for a simplicity of understanding, we internally, we try to calculate the embedded EBITDA numbers at a project level with the overheads of around 10%. So for FY23, since the half year was with legacy project, half year was with the new projects, this EBITDA margins is at 18%. For FY24, this embedded EBITDA margins is already at 26%. So what are the projects that we have launched in last financial year, FY23 H2 onwards? So we are confident of achieving a significant, price betterment as well as margin betterments, and which will get reflected into FY26 last quarter onwards in revenue recognition. And so is the case in terms of the P&L numbers as well. So yes, you are right. A few of the legacy projects which had a lower margin, our average realization around 4 years back was around 5,200, 5,100.
Right.
It has gone to 7,200. So considering that, so a very last leg of few couple of 100 crores would be from a historically low margin projects.
Rahul, Rahul, hi, morning. So 7,200 in, just under 7,200 in FY24 realization. What would this number look like? I mean, what are internal kind of expectations on this one?
So FY24, it is 7,200. For FY25, we are expecting around 8,000 rupees square feet of average price realization. At the same time, we are planning to launch around 8,000 crores worth inventory in this financial year, and we are confident of that. And it is segregated across portfolio. If you see at Pune, we are launching around 2,800 crores worth inventory, at LR 2,500, and likewise highest ever projects will get launched in a Mumbai, SBU as well. So that will help company for a diversification perspective.
And you said FY26 pre-sales would be 4,600 crores, right? 3,500 this year and 4,600 in FY26.
Yes, 4,500 crores.
4,500 crores, got that.
Okay, all right. Hi, Rahul. Good morning. Good to see you in. Give us a geographic breakup as well. Currently you're still skewed towards Pune. I think for next year, you're looking at around 70%. But say with a little longer time perspective, how do you see the geographic mix shaping up?
So see, if you see the last year, the BD announcement that we have done, half of that is from Mumbai. So from that perspective, so our focus on Mumbai is, so we are largely focusing on Mumbai from a BD perspective. And whatever the projects that we have concluded will get launched in the, ongoing financial year. Considering that, so Q4 onwards, there will be a diversification can be seen by the to the tune of around 25% from Mumbai and Bangalore. So likewise in Bangalore also we are working on couple of closures, business development closures. So that will be helping company for diversification of around 30%, and maybe we are aiming to have diversification of around 40% in next 2 years beyond Pune.
So all this development that's taking place, right? Will you have to take any debt on board, or will the net cash suffice? I think you're sitting on cash of about 25 crores. Any plans to take on any debt?
Yes, certainly. See, the fact is we are working on multiple BD closures. So some of the BD closures are of significant size. So wherever required to raise debt, so we'll be, we'll be cautious while raising a debt. But since we are sitting with very almost nil debt to equity, and board has given an approval up to raise up to 500 crores. So. We are okay to raise debt, but see, priority wise will be dependent on the internal accrual. Since most of the projects are getting launched, we are getting a good sales traction, hence the free cash flows are strong. The second will be dependency will be on a debt.
Okay, so just tell me, how much debt are you comfortable taking? You said there is an approval for 500 crores of...
Yes.
Okay, so is that the level that you're comfortable in terms of taking on debt?
Yes, so that is the comfortable level. So that is around 0.5, 0.6 debt to equity ratio. But yes, we'll be very judicious while raising the debt.
Okay. Got it. You said your embedded EBITDA in FY24, the embedded margin is at 26%, right? I was going through a report by Motilal Oswal where they said that the profitability, although in FY24 was impacted by the completion of legacy projects, going forward, your EBITDA margin by FY26, you can sustainably be at 20% overall EBITDA margin. Is that a reasonable assumption?
Yes, that's correct. So it is a journey of early teens in this financial year to late teens in next financial year.
Okay, all right, Rahul, we'll leave it at that. Thank you so much for joining us and speaking to us on CNBC-TV18. So that is Kolte-Patil with the way forward for the business and the improvement in the numbers as well.